Hello guys. So what I want to show you here is the plug and play entry model. So I'm just going to show you quickly here in like 2 minutes or 3 minutes. And then in the next video where we'll talk about the entry model, we will now break it down in some 10 minutes. All right. So the plug and play entry model here is this. I'm just going to show you one part of it. And I've been showing you in previous videos, you're going to master it. For the downtrend scenario, we have when the market is coming up, then we have a drop, and then we have a change of character like this. Now, you can call it change of character, which is good, like a sudden break above and a break below. But what you do after a change of character is what matters, right? And that's what I want to show you. When price pulls up and doesn't break above this high, right, like that, we expect price to sweep this low again or give us a double bottom at that low. As soon as it sweeps that low, get a double bottom, we are rest assured that price, most of the time, I prefer this low to be taken out. So we have another break of structure, like I taught you before. This top part here, price has made it a liquidity, right? So we just expect price to sweep this place, maybe deeply or little, and then, but not take out this high. This is where our entry will be. And then we just sell, right? To probably this low, the lows that price created after this break of structure. This is a new pullback, and then we catch our trade. This is for the downtrend scenario, right? And for the uptrend scenario, I would like to draw this one so it shows the break of structure, honestly. So our selling is to that low. And not to be greedy, you catch a very good sell on that. Because if you do, your entry should be just at the top of this place here. Your stop loss will be at that top there. And then you catch your trades up to that level, which is a good one ratio too. All right. And for the downtrend, and for the uptrend, let's say price is selling, and then price pulls up. We expect a sweep. That's the change of character, instant change of character right there. Sweep and break, that's change of character, sweep and break like it did here. Swept and broke, right? So we have a sweep below and a break above. And then it pulls back, and then that pullback breaks above again, like it did here. It has turned here into what? Liquidity. So we expect price to pull back to this extreme low and then buy, even if it's just here, we just buy and we rest, all right? These are the two scenarios. So I'm going to label these scenarios now. So I'm going to mark this extreme like that and expect price to come back into it. And then I'll mark the extreme here. But you see, we are going to mark it as A, B, C, D, all right? Quickly, I'm going to mark it as A, B, C, D. So we have, this is the sweep. We have A right there. We have A right there. The sweep and the break, which is B. We have B. We have B. B. And then we have the pullback, which is our C. Which is our C. And then we have a break of structure that the pullback costs, which is our D. So until we have our A, B, C, and D, you don't look for entries, all right? You need to see A, that's a sweep. Let me mark that sweep. That's a sweep. This is a sweep. You need to see a sweep, right? And then a break. Is that break that now forms B? Then when there's a break, then you know that is when your A and B can be marked, right? And then you now need to see C and D before you now mark A as your entry point. Okay? Same thing for this. This sweep is your A. The break that sweep cost is your B, right? The break that sweep cost is your B. The pullback is your C. You can see that. And this pullback will cause a break. That is your D. That is your D. So where will your entry be? On your what? On your E. On your E. Your E is coming back into your A. Your entry will be on your C though. Your entry will be on your C. Your stop loss will be above your A. Because that is your liquidity. Okay, your entry will be on your C. But your stop loss will be above or below your A. This is the simple plug and play entry model. Simple plug and play what? Entry model. There's nothing more here. There's nothing more here. And then you take your TP on D. You take your TP on D. Just go and write it down. This is your plug and play entry model. This is your plug and play what? Entry model. You take your TP on D. That's all. Don't be greedy. Take your TP on D. That's all. That's your TP. All right. So draw this, write it down, do whatever you have to do. This is a plug and play method. Your sweep that forms your A, and then your break. But until you see a break and a pullback, you can't really label it. You have to calm down, ensure that you have seen A and B and C form and D before you now look for E. If you don't see A, B, C, D form, there's no need for your E. This is Olu of trades method. This is Olu of trades labeling. Okay, this analysis is popular, but this is my labeling to this analysis, and it can help you. Just focus on this alone. You might not see more than 2 trades in a whole week, but trust me, you might lose one, but when you win one, you will know that you know where the price is going to. All right. Let me show you this. Let me show you this scenario on Euro GBP. Okay, Euro GBP. It might not be typical. Most of the time, we take our entry from, in order to be more secure, we take our entry from the low of the because if you can see, it's like head and shoulder forming here. We leave this sweep alone and we take our entry from here, the one that caused the sweep, the one that pulled up to cause a sweep, like here, right here. And most of the time, it's always around that liquidity area. So the same entry, your entry is the same, are almost the same level, right? So let's go to Euro GBP. Let me show you an entry that I have on the daily time frame. Quickly, that's just the entry model. Let me just explain ABCD to you with this chart. Quickly, let me just explain ABCD to you with this chart quickly. I know the smart ones will quickly grab it. I pray everybody does, though. I pray everybody grabs it. I pray everybody grabs it. Okay? I pray everybody grabs it. Now you can see a sweep here. You can see a sweep right here. You can see the sweep right there, right there. You can see the sweep. And then the sweep caused a break. The sweep caused a break, right? The sweep caused a break right there, which is very beautiful. And then there was actually a pullback before that sweep, though. This is another model entirely, though. But then we had a pullback here. We had a pullback here that caused a break. So we have our, let's mark it now, right? Our sweep is our A. A is right here, right? Sweep and break. No. This is our sweep here. Sorry, guys. We just have a double sweep. That's just the issue here. We have double sweep. That's just the issue. We have a sweep here that caused a break. Then a pullback that did not cause a break. You see that this pullback did not cause a break. If this pullback caused a break, price would have just come, tapped into here, and then moved. But because this pullback did not cause a break, you can see it. Sweep, that's A, and a break, that's B. Pullback, that's C, and a push up that did not break this eye that would have formed a D. Our D did not form. So we leave it. So now we have another sweep here again. This is a sweep that caused a break. This is a sweep A that caused a break. B, a pullback. C, that caused another break. D. So our entry will be on where? Should be on C. But because C is very far from the sweep, C is very, very far from the sweep, we now come towards that sweep and we look for other blocks there. And that is where I took my entry from. So I'm just waiting for price to come into this area, tap into it, and move. Do you see it, guys? Do you see it? That's what I'm saying. Let's go 15 minute time frame. Let's see if we can just quickly see something. Or let us go to the next video and then explain this with 2 or 3 examples, and then we can end this class. See you in the next video, guys. Cheers.